So now the first understanding is what is this equity share? Yes, we have discussed this in the previous sections, but now once again just to kind of recap that. So equity share means it is that part of the capital of any company which is shared by general public, where you contribute a small component and be a owner of the company. So all equity shareholders are actually the owners of the company, right? You have put in your money in that company, and that money of yours is being used for the company's business, right? And in return, what do you get? You get your dividends. Annually, when they declare the dividends, when the company is making profits, of course, you get the dividends. Dividends are what? It's a share of profits in the company. So equity share from the academical point of view is that part of, it's called as share, it's called as equity, because everybody is equal. It has got a face value of either 10 rupees or 1 rupee, as the case may be, and you are equal amongst everybody. And share means you have a share in the company's profits, right? And that share is to the extent of capital what you have contributed, what you have given to the company. So that's why it's called as equity share. There are other kinds of shares. We're not going to talk about other kinds of shares. So this is what we will trade. We will kind of understand. Now these equity shares, for the first time when the company comes up to the public, they do something called as initial public offer, IPO. Now what is this IPO? Like any company which kind of comes in and it wants to raise the capital, it wants more capital to expand and grow the business, it will come to the market, come to the general public and tell them that this is what we have done in the last so many years. And given that we have done and we have kind of grown pretty well, and we have kind of holding our company very well, and it is making profits or whatever, it has got a huge prospect in the future. Given that, now we want to expand, and for that expansion we need capital, right? That they will explain and take all the required approvals from all the agencies, and then an IPO is issued, initial public offer. So there, based on the valuation of the company, it's a different concept and topic altogether. I'm not going to kind of go deeper here. Based on the valuation of the company, a price is fixed for the share. The face value will be say 10 rupees, but based on the valuation of the company, because it is in existence for last 5 years, they've already bought the revenue to a certain level, the products are very good, and they have a huge future. They've kind of, their future looks bright. Because of that, the value of the company will be much more than what it would have been otherwise at the beginning. So with that, the valuation is done, and then what they will do is they will say face value is 10 rupees, but the value of the shares which will be issued will be at say 50 rupees or at 70 rupees based on how much premium it deserves. So there is a whole methodology for valuation. There are agencies who kind of do that. So now when that get issued, people, general public apply, and whoever kind of gets it, they become the owners. After that part of public issue which has been made, that will be available for trading in the stock markets. Right? So when a company issues those shares, now for example, I kind of go apply for IPO, I get that. So now that shares now are freely available in the market. If I want to sell, I can simply go and sell it to somebody, and somebody else can keep buying. So that way there are a lot of trades which keeps on happening. So then the ownership scale keeps on changing. I got initially the offer, I took that. After that, for some profits, I sold it to somebody. I needed money, because of that I kind of sold that. So that kind of keeps happening. That you can do, or you can even hold it and accumulate. There is no time duration for cash or equity, right? It is not like futures where every 2 months, 3 months you have to kind of keep rolling over and the contract expires. Nothing of that kind. So once you buy, you can hold it for a very long period and also pass on that particular shares to your next generation. That is the beauty of equity shares, and it's kind of very good wealth. And you can even, at time of need, if you don't want to sell the shares, you can use that to pledge. banks accept that as a pledge and they'll give you a loan if you want to, instead of selling, because you are anticipating that the share value will go further. So instead of selling and getting the money for emergency need, you can even pledge and use that money for your purpose, and then later on repay that loan and you get remove the pledge back and get that shares completely to yourself. So that is also kind of possible. So that's a very, very advantageous situation that way, to kind of have certain amount of your capital in equity shares as well, right? So if you wish to, it's not that it is a must, right? So it's a good practice to kind of have certain capital and then let it keep growing. The wealth also accumulates. Another advantage is, unlike trading in futures, here if you trade in equity, for the period you are the owner, you get dividends as well. If the company declares a dividend comes to you as well. So you can kind of get quite a bit of, if you have a reasonable sum of capital there, put in there, so you get constant dividends also coming to you, which is also kind of very, very good thing, right? So the value of the shares is going up. Along with that, you're also getting dividend. It's a double benefit. That way it kind of works. So that is called as equity shares, right? Hope you kind of understood equity shares. Now in here, we will kind of understand the kind of investing to do and also kind of trading to do. So far, I'm assuming you kind of got what equity share is, and if you're kind of comfortable with equity shares and you understood that briefly. I'm not going to go very deep. It's because most of you, I'm sure by now you already know what equity shares are. So equity shares. So how to kind of, what kind of systems to do and everything in the next video. See you in the next video. Bye.